Alright, hey, what's up guys? Scott here again with a brand new video, and for this one, I'll be showing you all the exact kinds of situations in the charts basically that I personally look for when placing outright bearish trades. So for example, my preferred way of doing that is selling short naked call options, but even if you don't want to use those kinds of undefined risk strategies, then doesn't matter. This video here will still be very helpful in showing you again the exact kinds of setups to look for when placing any kind of bearish trade in the stock market. But also, of course, as I usually mention about selling naked options, right? These kinds of strategies only have that undefined risk if you do nothing to defend the trade, which you should always do, right? You have to have your trading defense as part of a solid trading strategy. So also in this video, I'm going to show you guys in particular how I do defend short naked call options. Now, briefly here before we get started, make sure you guys watch until the end of the video because at that point, I've got a very cool opportunity for you all where you can receive up to 10 free stocks. And then also here, for anyone who would like to join a very exclusive online community where you can learn how to successfully trade options and learn my custom approach to the markets, then you can now join my options trading Discord. So definitely make sure to check out the description of this video below to learn a lot more about that. And then finally, for anyone who is also brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you will also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you join SKILLSHARE using those links, you'll get a full 1-month free trial. Alright guys, so now diving in here, and also forgot to mention for this video that I'll be reviewing an actual trade I made this morning, selling a naked call option on Meta platforms, again, based on all the charting analysis that you're going to see in this video. And so now when it comes to scanning the markets and looking for potential bearish trades I want to make, the first thing I'll look at is what the broader market indexes are doing. So for example, if there's some stock I might want to place a bearish trade on, I'll look at what the relevant index is doing. And in particular, I want to see that index also be in a bearish kind of setup. So for example, in this chart here is QQQ, which is an ETF that tracks the NASDAQ index, mostly tech stocks. And so we'll go ahead and zoom in here a little bit. And so as you can see here, most of the technical analysis I do with my charts is based on basic support and resistance levels. I do also have some moving averages here as well, but again, mostly I pay attention to support and resistance. Now in the case of the Qs here, as you can see, this ETF has reached a potential resistance point at around $330 per share, because if we come back to this time period around, looks like late April, there were multiple times where this level acted as a major resistance point, right? Time and time again, the Qs tried and failed to get above that point, and ultimately it ended up with the bear market here continuing and gaining some major momentum. And actually so far today, as you can see here, the Qs tried to get up and reach that point, and so far at least are being repelled back down lower. Now of course, does this mean or does it guarantee that the Qs here are going to sell off further and further and we're going to basically continue the next leg down lower of this bear market? No, there's no guarantees at all in the stock market. But I do think at this price level, especially considering just how far the Qs have gone in recent weeks, bottom line here, I do think at this point does offer a pretty good chance or a good probability of seeing some downside action. And ultimately, that is the essence of trading, right? It literally is a game of chance or a game of probabilities. So of course, there are no guarantees. There are no certainties with your trades. So therefore, your job as the trader is to find setups where the chance of a payoff is in your favor. So again here, I think the chance of seeing some downside action with the Qs or tech stocks in general is pretty decent at this point. And so as a result, once I saw this morning that the Qs got up to a price of 330 and just touched that point, I was definitely very active in scanning my watch list, basically looking for tech stocks in particular to place some bearish trades on. And so ultimately, that's how I came across Meta platforms. So we'll take a look at META, and I'll go ahead and zoom in a bit here on the chart. And so as you can see here, Meta platforms has been on a major tear for the past few weeks here. And this morning, it got to a high of around 183 per share, which is a major resistance point, right? So back through all this time in the winter and springtime of this year, this price was acting as a major support level, and then once Meta platforms broke down below it, it flipped into resistance. right? So for example, you can see very clearly right here where Meta Platforms tried to get above that point, but it failed in a major way. So ultimately, this is the second major thing I look for when placing bearish trades, right? So again, I first want to see the relevant index reach a point of resistance. And then also I want to see the individual stock be at resistance as well. And so bottom line here, that's why when I saw Meta Platforms get up to this price once again, I immediately stepped in and sold. If I come to the monitor tab, I sold a single naked call option, one contract with a 195 strike, and did so for a nice credit of $385. And so far, as you can see here, this is my current position in Meta. So far, this trade is doing very nicely. So basically, a few hours after I made this trade, this position is already up by about 115 bucks. So far, so good. But now, of course, what about my defense on this trade if things go terribly wrong? I mean, again, resistance levels are a good potential opportunity to place bearish trades. But like I said earlier, there's no guarantee that the stock will go lower from that point. And so if we come back to the charts real quick, my first major line of defense on this trade is the fact that I sold a call option with a 195 strike way up here. So therefore, as long as this stock stays below 195 by the expiration date, then there's no defense required at all on this position, right? Because eventually this contract will either expire worthless or it will decay in value to the point where I can buy it back for a much lower price. And so this here is one of the main reasons why I love to sell options, right? Because you can sell your contracts pretty far away from the current stock price, and that in itself gives you some good defense and a very high chance of making a profit. But now what if I'm just super wrong on this trade and Meta Platforms just explodes higher and does cross my 195 call strike? Well, at that point, once it does cross my call strike, that's going to require some defense. And so essentially what I will do in this case is once the stock does cross my call strike, I will have automatic orders in place that are set to buy 100 shares of the stock to cover the initially naked call option. Right, so basically, I'm going to convert my naked call option here into a covered call option. And therefore, if Meta Platforms continues to go higher after that point, it does not matter because my call option will be totally covered by the long shares of stock. And I could still have the potential to walk away with a profit by the expiration date or perhaps a bit sooner. So for example, let's now go back to the trade tab real quick here. And specifically for this trade, I'm in the September 9th weekly expiration with 29 days left to go. So we'll unfold that tab here. And again, right there with the 195 strike is my position. And so now to set up my defense here, I'm going to come up to the top of the screen and click on the current price of Meta Platforms and then go to buy custom and then go down to the J through N category. And right there, as you can see, I do already have a template set up to buy and sell the stock around my strike price for this trade. So I'll click on Meta here. And here we go. Down below, this is basically a complex series of orders that will execute in a chain reaction kind of manner. And basically, it's just a series of stop limit orders that are set to repeatedly buy and sell the stock, again, around my strike price. And real quick here, I do want to mention that I have a separate video that takes a deep dive into how to create these kinds of advanced orders in thinkorswim and explains exactly how all this stuff works. So I'll post a link to it above so you can watch it later. But for example, with this first order here, which as you can see is a buy order to purchase 100 shares of stock, I'm going to set my stop price to be a little bit above my call strike. So I'll choose 196.5. So essentially that's $1.50 above my 195 call strike. And then for the limit price, I'll set that to 197. So bottom line here, this stop limit buy order is going to buy 100 shares of stock if Meta Platforms gets to a price of 196.50. And then also it will not pay more than 197 to buy these shares. And so great, if that happens, this order will execute automatically and I'll purchase 100 shares of stock to cover my initially naked call option. But then of course, what happens if Meta Platforms goes back down below my call strike here? Well, at that point, I have to sell my shares and get rid of them. In which case, after this first order gets executed, then the second order here will become active. And this one, as you can see, is a sell order to sell my exact 100 shares of stock. And all I have to do here is configure my stop and my limit prices. So for my stop price, I'll set that to exactly my strike price of 195. And then for the limit price, I'll set that to 194.50. And so now the full picture here is, again, this is the first order that will get executed if Meta Platforms gets to 196.50. And in that case, I will purchase 100 shares of stock at that price. But then if Meta falls back down lower, then this order will be next to get executed and sell those shares at a price of 195. So basically, I would take a loss of $1.50 per share between these two orders here, which times 100 shares is a full loss of $150. But that is still totally fine, at least at that point, right? Because again, as I showed you, my total credit on this trade, at least my starting credit, is almost $400. So clearly I can afford to lose a little bit of money from these stock hedging orders basically, and still potentially walk away with some sort of profit. Right, so again, my starting credit is exactly 385, and if I lose 150 from having to buy and sell the stock for a loss, then I'm still left with $235 left over, and that's still fine. And then for the rest of these orders here, it's the exact same process, just a flip-flop basically between repeatedly buying and selling the stock at those exact same prices. Now, of course, also, if this happens many times, right, where the stock continues to repeatedly bounce through my strike and I have to buy and sell the stock multiple times for losses each time, then yes, eventually my losses will exceed my starting credit. And so it would be at that point where I have to start making adjustments to the position to collect more and more additional premium or additional credit. And basically the way I would do that is to sell a put option against my existing call option. Right? For example, I could sell maybe the 165 strike put for an extra $335 in premium. But of course, also the main caveat or the downside of doing this is now if Meta Platforms does have a major fall and perhaps crosses down below my put strike here, then at that point I have to short 100 shares of the stock to cover this naked put option. And then in the case where the stock might bounce through my put strike a few times and I lose some money as a result of that, I can also roll down my call option and collect even more premium. And also, even on top of those adjustments, there are more complex things I can do, which perhaps I'll show in a different video because it would take a long time to explain those different kinds of adjustments. But the point being is there's tons and tons of things I can do to manage and potentially save the trade. But bottom line here for this video, the main point is I wanted to show you again the kinds of setups that I personally look for and that you might want to look for as well for placing bearish trades. And then also giving you some ideas as to how you can defend a short naked position, right? So again, selling naked options only carries undefined risk if you do nothing to defend the trade. So whether you want to pursue an approach like this, where you're buying or shorting the stock to defend your positions, maybe you want to use a rolling approach to defend trades, doesn't matter. But if you do something to defend your trades, then that naked risk component does not really matter. But anyways here, that's going to do it for this video. I hope you enjoyed it. But of course, one last thing before we take off, I've got a very cool opportunity for you guys where you can receive up to 10 free stocks. So basically, there is a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, they're offering you the opportunity to receive up to 10 free stocks when you open a brokerage account with them using my link in the description of this video. And so the Moomoo trading platform is highly competitive with other comparable platforms like Webull and Robinhood. There are absolutely no trading fees on stock or option trades. You also get direct trading access to US, Hong Kong, and Chinese markets, which is something I have not seen being offered by competing platforms. Moomoo also comes with a free, very advanced, yet totally user-friendly trading platform that you can install on your computer or your smartphone. And of course, everything is regulated by the SEC and FINRA, so your trades and your investments are properly insured. And so if that sounds good to you, then again, use my link in the description of this video to sign up and get your free stocks. And also don't forget to check out and join my options trading Discord as well as my Skillshare courses. Links also in the description of this video. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.